Hi, everybody. I think everything is set.
Hello, sir. Yes, sir. Almost everything is done.
Done. Done. Great.
Hello. Ma'am, it's already 52. Hello.
Hello.
Yeah. Ma'am, it's 54. So we'll just go live in like 1 or 2 minutes. Before that, Vikas sir, may I request you to kindly turn on your webcam as well so that I can, take a picture.
Sure.
Stop this share screen. Just a minute. Okay. So on the count of three, we'll just take a picture. One, two, and three. One more. One, two, and three. Okay. Ma'am, can I just start the webinar now? Hello. Hello. Ma'am, can I go live?
Yeah, sure.
Yeah, I'll just go live. We'll start at exact 5. So I'm just starting the webinar. Ladies and gentlemen, we'll just wait for a few more minutes and then shortly begin with the webinar. So please stay tuned. Good evening, ladies and gentlemen, and a very warm welcome. Today, EU Chambers, along with Dev Mantra Financial Services Private Limited, have organized a webinar on advanced tax, important validation before payment. As we all know that the last date to pay the advance tax is on Monday, March 15th, we believe that doing a webinar at this juncture was crucial as many of you might have a lot of questions in mind regarding the subject. So I strongly believe that today's webinar is going to be a really useful one to all of us as this session involves a lot of things. Just to name few would be when should one pay tax, when not to pay tax, that is when not to pay advance tax, how advance tax is calculated and how to plan your compliance for 2021 and 2022. Before we begin, I would request all the attendees to kindly post your questions, if any, in the Q&A box so that our speaker can address it later. Let me begin with introducing you to Dr. Renu Shom, the director of EU Chambers. She has been associated with the chamber for more than a decade now and is responsible for the overall activities of the chamber. Dr. Shom, may I request you to kindly give the welcome address?
Thank you, Anvita. Good evening, ladies and gentlemen. At the outset, let me extend a very warm welcome to all of you present at this webinar on the advanced tax important validation before the payment. Also, I would like to thank our today's speaker, Mr. Pratik Yogi, Associate Dev Mantra Financial Services. Let me introduce him very briefly. Mr. Niyogi, a chartered accountant, partner at Entatia and Associate of the Dev Mantra Financial Services, with almost 20 years of experience in handling the diversified finance functions, compliance management, direct and indirect taxation, international tax, project finance. He is a diligent and the impactful tax advisor with a rich experience in tax due diligence and has an expertise in the process rationalization. Sir, may I request you kindly educate us about the subject? But before that, we go to the session. I just thought very briefly, I would like to talk about the activities of the chamber. Most of you are aware of it, but for the sake of non-members who have been also participating, I thought let me take the opportunity to very briefly talk about the organization. This is a chamber which has been set up in 1992 with the objective basically to promote the business between the two continents, EU and India. So we have been almost here for 29 years, and the chief patron of our organization is the EU ambassador. And we have a binational chambers also who are representing our organization, and we have companies, EU and Indian companies who are associated with us. Also, I would like to mention about that last year we formed some 7 sector committees, and I can only say like now our active, all the sector committees are very, very active. And, we have already had a few meetings with all the sector committee members, and we are planning a lot of activities during each and every sector committee. So I would request you all to kindly stay connected with us, be in touch with our secretariat, and take the advantage of attending the many activities. Like, for example, on this 16, we are planning to do something with the Holland, and I'm sure the members who have been exporting can take the advantage of attending this. So with this word, I would like to thank once again all of you for attending, and over to you, Mr. Nyogi. And I'm sure by end of a session, we all are going to be wiser with the subject. So thank you, and please enjoy the session.
So you have to unmute yourself.
Thank you, Dr. Shom. Thank you, the European Union Chambers, for giving me an opportunity to speak on advanced tax, the validations before payment. First of all, since Dr. Shom has introduced me with a person having 20 years of experience, and in the context of advanced tax, I want you people to take you back 20 years. The reason is, what was my perception about advanced tax 20 years back? That is more important, because 20 years back, when I was in academics mainly, advanced tax was the chapter which I felt very redundant for me, and I didn't like the topic at all. The words which were used in the sections were very monotonous. I didn't find any merit in the sections as such. And also the compliance part was that, and a few percentage of tax has to be paid to the government beforehand. That was my conception. Now, over the years of practice, it has given me a picture which is just opposite of what I had 20 years ago. Now, to my objective of this session will be to give all of you a feeling of what I had over these 20 years, and what exactly is this advanced tax, and how this is important for all types of assessees, not only business, also the assessees who are individuals. And to begin with, what exactly is advanced tax per se, if someone asks me, it all depends on one's assessment of how the tax will be payable, how much will be computation of total income, and how much should I pay tax, and when should I pay tax. If I don't pay the tax, what are the implications? So throughout my slides, which I will share very soon, I will be describing you the first point, how to assess your total income. How to assess, when to assess. You have to assess at the beginning of the financial year. I know it's very difficult to assess what would be your income down the line, but that's what the income tax gives us, an opportunity to pay your taxes in a piecemeal manner. So your first estimate of income might vary with the second iteration of income, which can happen in the month of December or later on in the month of March. So that assessment is very vital for you to understand. Not only this, after you assess your income, or you should understand what is your income. Income doesn't mean your gross income per se. Income means the income which you project, as well as the tax credits. I mean your TDS, your tax amount, which the other party has already deposited into government's exchequer, that you need to consider as a payment already made on account of advance tax, and you need to deduct. Of course, you are running a business, you must be having some certain credits into MAT, which also has to be considered while computing the net tax liability of advance tax. So after computing all these, you need to pay on the respective debts, and when you don't pay or you pay short, what are the implications? The entire story now begins here when I share with you the screen. So as I said, the agenda of my deliberations to you, respected attendees, is what is advance tax, what are the sections governing the advance tax, which as a professional, yes, I have to have the control of those sections, but I urge the taxpayers at large also to be aware of the sections so that they are able to understand their commitment to the government as per the statutory provisions. So there are basically sections 207 to 211, which is reproduced here, 218 and 219. These are all sections before you come to the penal part of it. Penal part, of course, is governed by 234B, 234C, 273, 221, and of course 276, which is not only penalty but a prosecution. So you, as I understand, as I tell you the sections per se, I have started with the charging sections to prosecution. So one answer to your question, which is already in your minds, I know, is if I don't pay advance tax, what the government or income tax can do against me. Yes, I'm very clear on that. If at all it is proved that it is a deliberate attempt from your side not to pay advance tax, you will be prosecuted under section 276. So that's a very important message I want to give you all people. Now I'll just start with the slides. Preliminary, there are two sections which deal with the chargeability or advance tax. Advance tax as per section 207 is payable on the current income. So what is current income is, as I have written in the slide itself, pay as you earn income. This is section 207(2). Down there in subsection 2 of 207, which says an exception. So what the exception is, it's a provision rather. The exception says if any person, what do you mean by any person? Any person here means a resident individual. It is categorically mentioned in subsection 2 of 207. A resident individual having profit and gains of business or profession, that means he's having a business income, and who is above 60 years or more to be precise, then he has to pay advance tax. So in this case, a person who is 60 years or more but doesn't have any income from profits and gains of business or profession need not pay advance tax. So this is 207 subsection 1 and 2. Now the other section which has also to be read along with 207 is 208. What does that say? You have to pay advance tax only when your tax liability is more than 10,000. Now, how this tax liability is calculated, that of course I'll come down, but that's the criteria. 10,000 or more, you should pay advance tax. If you're a senior citizen, you need not pay advance tax provided you do not have business. This is what the entire chargeable sections of 207 and 8 tells us. That's what I've explained earlier also. Liability for payment of advance tax. This is given by a flowchart here. Now we come to the next section, which is 209. How do you calculate your advance tax? See, there are three procedures described here. 209 subsection 1 says so. An assessee can himself assess his income and pay the advance tax. Now, how to assess his income is again described in the following slides, but of course the manner itself is embedded in section 209, and the act itself is very clear on computation. So it's not a practice or a method which has been developed by taxpayers over the time and you need to follow them. That's not the thing. You have to follow the statute, which statute says. So that's how an assessee can compute his income. Of course, the assessee might not be aware of advance tax position or the law. In that case, what happens is the assessing officer who is assessing his income, the assessing officer who is assessing his income might pay the advance tax in this regard. So might assess the income tax payable by assessing in this or in this regard, and also later on it can amend the order itself. Now the first point, how do you assess your income, is the gross part of it. You need to assess what will be the income under different heads. It can be salary. Salary, of course, is taken care of by your employer who deduct taxes in the respective months, and that goes as a part of advance tax also, unless and until you have separate sources of income, like income from other sources, capital gains, house property, wherein you might have to calculate on your own and pay the tax. Now, when you compute the total income, you arrive at a total income figure. The next question is, what will be my tax rate? For individuals, there is separate tax rates. For non-individuals, the tax rates are, in this context, divided into 5 types. So corporates have to select these very correctly and understanding its current situation. There is a tax rate of 15%, wherein section 115 BAB is applicable, and wherein it is registered after October 1st and has commenced manufacturing on or before 31st March. So it's especially for the business people. And second category is, of course, 22%, wherein you have the option of this concessional tax rate without applying for any exemptions, incentives, additional depreciation if applicable. Of course, the other 25% is there who had registered before March 2016. And if nothing, in fact, qualifies for business houses above the 3, they can go for 25%, provided the gross receipts of turnover is less than 400 crores in the previous year. And none of the conditions are satisfied out of the 4. Business has to pay tax at the rate of 30%. So business houses have to compute their taxable income. After that, they have to calculate the tax part of it and deduct the relevant TDS, VAT credit, and arrive at the total tax payable, and which has to be divided into different timelines. I will come to that, to pay the tax. Now I have already told you the mechanism anyway. It is specifically given in section 209. So I'll just read out those. You have to first estimate the current income, the financial year for which the advance tax is payable. Then compute the tax as per tax rate given in part 3. That's what I have just explained you. 25%, 30%, 15% story, and of course, individual tax rate story. That story that we apply here. And on the net tax, if any computed, add surcharge if applicable, and education says. You have the option of allowing relief under section 89, 90, 90, 91. These are relief which normally you don't come across, but these are related to some areas salary if you have received in the current year. There is some international transaction relief. So all these are considered here. Now from that, you need to deduct the credit of tax under 115 JAA, 115 JT. MD credit, of course, is available to non-corporate associates, and on certain criterion be fulfilled by those associates too. Deduct the tax deductible and collectible. The balance is the amount, is the advance tax payable if it is 10,000 or more. Now, this payment of advance tax, 209, I have told you how to calculate that and how you need to pay. I have mentioned in my earlier speech that you need to pay on certain timelines. So that's what, and certain percentages. So that's what section 210 clearly explains you how you need to pay those. Now, there can be two methods of payment. You can pay on your own, or it can be paid on an intimation received from the assessing officer concerned. On its own, it is compulsory. It is compulsory to pay if the person liable to pay on or before the due dates as specified in section 211. There are certain due dates of advance tax. That is 15th of June, September 15, December 15, March 15, and it is compulsory for an assessee to pay that. Section 211 specifies the dates and the percentage also, which I'll come and discuss in the slide itself. Yes, 211 is 210 is another section, subsection 2 of section 211 categorically states that you can adjust the tax which you have already paid in any installment in the next installment. So there might happen your estimation for total tax payable. In fact, the total taxable income which should accrue to you during the current year may vary. It might so happen that you have paid excess tax. So, sorry, a person paying in installments can adjust to match up with his estimate of his current income and the advances. So that statutes categorically is provided in the subsection 2. You can plus minus your liability. Absolutely, there is no harm to it. But of course, there is a catch in this. Statute is allowing you under subsection 2 or section 210 to do this. But there are certain positions wherein there are certain penal provisions under 234B and C, wherein you might have to pay the additional interest. So that's what that's the catch which statute has provided to the assessees, and you must take care of this. Except certain exceptions, we'll come to that. A person, if his estimation of advance tax is less than that mentioned in the order, can send an intimation to the assessing officer on or before the due date. Intimations, of course, there's a specific form 28A, where the assessee can intimate that whatever you estimated is less than what you have estimated, so I need to pay, and I did not pay the advance tax. So that's what an intimation on 28A goes. And if the estimation is more, they can pay on before the date of installment of payment. So on the other side, the assessing officer can issue an order anytime during the financial year, but not later than last date of February. This is the order which is referred to in left hand side on his own record panel. So this, in fact, this order relates to this one only. An assessing officer can issue an order anytime during the financial year, but not later than the last date of February. So my my request to the assessors is that if any intimation has come, you need to check the date of the intimation per se. And if the date is after the last date of February, you can challenge the order of the assessing officer. But practically, these days, the errors are checked because income tax also, the department works on a very robust information system, and they do not generate any order these days manually. They do it through their system only, and system of course takes care of the parameters of last day. So these days you will hardly find this, but if it all happens, you need to basically address these. And this type
Question.
of order per se
The question
will be
different, which she will
order.
ask.
SSC has already
Based on
been
this is the query. Which
by your
query
written
is on.
assessment. If there is a return of income filed by the SSC after issuance of an order, then the assessing officer may make an amended order and issue a notice or demand to pay before the due date.
Mhm. ठीक.
Now that's what I was telling about the percentages and due date. I've already told you. Let's have another reading on that. So for all types of assessments, whether it's corporate or non-corporate assessees, the due dates have been as under: on or before 15th of June, not less than 15% of advance tax payable; on or before 15th of September, not less than 45% of advance tax payable; on or before 15th of December, not less than 75% of advance tax payable; on or before 15th of March, not less than 100% of advance tax payable. Now, among these sections, as I've told, if there is any default by the assessee, in that case, definitely the assessee will be deemed to be in default. Now, there are certain sections which I'd like to deliberate upon. It's not in the slide itself. It is section 211, subsection 6, which is very important, wherein it happens. So I'll just go back to the previous slide, wherein the assessing officer here gives you a notice, and you need to pay the tax on the basis of the notice. But there's an option to the assessee itself to utilize Form 28A. Form 28A is an intimation to the assessing officer regarding the notice of tax demand, wherein the payment of advance tax which you want to make will be less because of your own estimation. So 28A, of course, is relevant here. You can contest with the assessing officer concerned. Now, if you don't pay advance tax at all, straight away there is no question. The statute is absolutely clear. You are an assessee in default. And section 156, they will raise a demand and you need to pay. Now, what are the circumstances in which this section 218 will be applicable? The assessee doesn't pay the required installments on the above mentioned date. Please mark the words, the assessee doesn't pay. Here, doesn't pay means he doesn't pay a single penny. If he pays some, there are certain other sections to take care of. So assessee does not pay the required installments on the above mentioned date. Does not send intimation to the assessing officer before the installments or details. This is what I was talking about. Intimation Form 28AA. Does not pay on the basis of his current income the advance tax payable by him. So in these situations, he is absolutely an assessee in default, and what the income tax can do against these, I will come to that later. And of course, any amount which you have paid for advance tax will have a credit for that particular assessment year. Just like TDS, the advance tax paid will also be set up against your tax payable in that particular year. Now, let us come to what are the problems when you don't pay the in advance tax at all. I'll begin with the simpler problems which can come to the complex ones. The first problem which will come is the department will definitely charge, which is specifically written on the statute under section 234B. This is interest. They will charge interest on non-payment of or short payment of advance tax. This is when applicable when you fail to pay advance tax, you have paid advance tax, which is less than 90% of assess tax. Rate of interest is 1% for every month or part of month. An amount on which it is payable is assess tax and assess tax minus assess tax paid. The question is, if at all you have to pay interest, what is the duration on which you have to pay? It will begin from 1st April of the assessment year. 1st April of the assessment year means not the current year. The year assessment year income tax percentage is of course for the persons who have not specialized in income tax and will name and definitely for the general assesses in general. This is the year which follows the end of the previous year. So previous year basically in income tax balance is financial year, and assessment year is the year which is following the financial. So 1st April of the assessment year to the determination of income, or where regular assessment is made to the date of regular assessment. So what happens ki, when you end this year 2020-21 and you might have not paid advance tax, so you have paid advance tax, which is less than 90% of your assessed tax or estimated tax. Then income tax definitely has the law of computing the interest of 1% for every month or part of month, beginning from 1st April 2021 till your assessment is made under section 143 or under section 144. So that's what the interest burden you might have to bear initially when you don't pay advance tax. The situation 2. So it's again an elaboration of what I have said. If advance tax is not paid on 15 June, is less than 15%, then it is 1% every month or 15%. I'll just this is in fact 234C. There is another section, section 234C, which says deferment of advance tax. So situation 1, you don't pay advance tax at all, so you pay advance tax with less than 90%. Situation 2, you pay advance tax, but you do not pay the advance tax at the specified percentage as given in section 210. And what is the effect of that? So that is taken care of 234C, which is coming in the headline in fact. So when is interest payable? If advance tax is paid on or before 15 June, is less than 15%. Now, interest is payable 1% for a period of 3 months. What is the liable tax amount? 15% on tax amount minus if you are paid in advance tax. Now coming to quarter 2. If advance tax is paid on or before 15 September, which is less than 45%, then you need to pay 45% of tax amount minus advance tax paid. That is the liability amount. On that, you need to calculate interest at the rate of 1% per month for 3 months. If advance tax is paid on or before 15 December, it's less than 75%. Then 75% of tax amount minus advance tax you can be paid in early installments into 3 months into 1% is your interest which you have to shell out. Now there are certain exceptions. So it might happen. It all depends. This advanced tax and estimation of income. It all depends how you assess, how you estimate your income for a particular year. Now it might happen that certain incomes you might not have forecasted, you might not have thought of, and in that case, the genuine default from your point of view, do we need to pay interest on that? Because I really didn't have the opportunity of knowing what will be my taxable income. So this situation again is dealt with by a proviso to section 234C. The proviso says if you have any amount of capital gains, if you have any income which is stated in clause 24 subclause 9, that is lottery or any puzzles or any games you earn income under the head profits and gains varying into the first time of your business. You do not know how your business will perform. Or income of the nature referred to in section 115 BBBA, and the assessee has paid the whole amount of tax payable. So in these situations, it might so happen that you are not aware of this type of income which is accruing, and you have to pay the tax on it. So you didn't pay because you didn't have a fair idea of how this income will accrue. In that case, of course, you have the exceptions as enumerated in the act itself, wherein if you have a capital gains which is not arise in quarter two, quarter one, quarter three, but it might happen in quarter four, you have to pay the tax. You have not paid the tax part as an advance tax in the prior installments. So you need not pay the interest. So these are the exceptions. And if you're having a first time business income, this will also allow. So in these situations, the act itself is lenient enough and it's given us the opportunity. But it will not cover situations where you have considered certain deductions under Chapter 6A, like Section 80C, let's take, and you do not invest on that. And on last quarter comes and you see that really we have not invested, we don't have the fund to invest. So do we have to pay interest? The answer is absolutely clear. You need to pay the interest on that. And if there is certain business income for a running business, which of course may be casual in nature, it may not be from the normal operations, maybe a slum sale or something like that. So there are other provisions, but again, 234C is not an exception. So you need to keep all this into account. And there is one part of it also, which as a question I might have expected from persons who are knowledgeable enough here, is that certain entities, certain associates have uh, a return filed on the basis of some presumptive income. Presumptive income is you need not show your turnover or expenses and pay the tax on that. You have a particular figure of turnover on that assessment, on that presumption, certain percentage of tax, total income is assessed, and you need to pay the tax. So the Act categorically in provisions of Section 211 and of course section 234C also, it has stated that in case of persons who are having presumptive method of filing return, that is under section 44AD and 44ADA, these, not all the presumptive incomes, only section 44AD and 44ADA. In these situations, even if you have not paid your advance tax installments before the installments which comes on 15th of March, there is no problem. You need not be charged any 234B, 234C per se, but you need to pay the entire amount of advance tax before 15th of March of any previous year. So for presumptive income who are claiming deductions in the section 44AD and 44EDA, this is a boon. You can utilize your funds elsewhere and pay the tax before 15th of March without any fail. But it doesn't mean that you will be exempted from section 234B. Of course, if the total tax paid is less than 90% of the assets tax, in that case, 234B will be applicable, and you need to pay 1% interest for a month or part of month for a period till your assessment is completed. Now, coming to the penalties and prosecution section, I've given a little bit of knowledge to you. I'll just iterate on that. Now, what happens is there's a provision of section 273, which is still there in our tax laws. 273 subsection 1 is the penal provisions. The 273 subsection 1 itself is wide, because it states that if any person who is required to give a statement under 209A or 212 has given a false statement, knowing it to be false, or has not given a statement at all, he'll be penalized under the provisions of 273(1). The maximum penalty might be 1.5 times of the tax evaded for a period of 3 months. This is the section still there, but this is not a relevant section, because in 1987 an amendment was made wherein 209A was abolished. So what was 209A? I will explain you. It was a method where assessees had to intimate to the department in writing, this will be my estimated income, and this is the advance tax I'm paying. So it was a transparent procedure. I don't know why it has been repealed, but of course it was transparent, but the department had the option to issue notices, because most of the time the declarations made by assessees was not proper, and there was separation of income. So 273(1) penal provisions were made applicable, and rampant notices were issued. But in 1987, this section itself was abolished, but unfortunately the penal provisions are still there. Now, you might, in the current situation, what is the practical possibility is that I have never seen the department issuing penal provisions under this section. But there's a section called 221 subsection 1, which is a liberal section to the assessing officer to impose penalty according to his assessment. So you are at the mercy, the assessee is at the mercy of the assessing officer under section 221 subsection 1. Who is under the mercy? An assessee in default. In the context of advance tax, who is an assessee in default? Section 218. Please refer to that. So penal provisions still now is very much applicable. Not only that, a step further, prosecution. Willful attempt to evade penalty, to evade tax, penalty, or interest. Now, if it is proved that your effort of non-paying advance tax is 100% willful, then you will be prosecuted. Now, assessee can contend how department can assess that I have made a willful attempt. It is not so easy. The department makes a thorough homework, which is very much commendable. It studies your pattern of income, pattern of return income for last 2-3 years. And on the basis of that, the assessing officer proves you that you are a willful evader. So in those situations, whenever clients come to us, we as professionals really find a very challenging task to save the client. Our intention is not to save tax evaders, but to give them at least some sort of comfort from the point of taxation, from the point of statute. Anyway, if you're gone for prosecution under 276, fine for an amount. If your default amount is more than 25 lakhs, imprisonment for 6 months to 7 years plus fine. Now, this is in the slide itself, it is written imprisonment. No, sir, it is rigorous imprisonment. Rigorous imprisonment for 6 months to 7 years plus fine. Of course, if it is any other amount, 3 months to 2 years plus fine, and imprisonment, rigorous imprisonment is both applicable for both these situations. So, whoever is attending this seminar, whatever I have said to you, please take due care. Do not pay your tax short and be precise in your computations. There is a general feeling among the Indian corporates, with due respect to their planning, if we won't pay much of the tax to the government in advance, why do we pay? We will invest in your business and make some money. This is absolutely wrong conception. If you want to follow compliance, if compliance itself is a agenda for you and the corporate houses, please follow it totally. Don't half follow it. It doesn't make any sense. It only attracts litigations and prosecutions, files, penalties. So I will take you through a judgment of Honorable Supreme Court. This is an old judgment. It's CIT versus Anjum Muhammad Hussain Haswala, 2001 case, wherein the High Court of Gujarat, it's a Gujarat case. It said that he is not supposed to know at the time of assessment in section 144. The High Court says the assessee is not supposed to know or anticipate his return income. So how you can expect the assessee to pay the advance tax at all? Now the High Court further held that interest is payable in future only, after the dues are finally determined. This was taken to the Supreme Court and Honorable Supreme Court observed as under sections 234A, 234B, I will quote that. It's Honorable Supreme Court's wordings. And 234C, in clear terms, impose a mandate. It's a mandate to collect interest at the rate stipulated therein. The expression shall used in this section cannot by any stage of imagination be construed as may. There are sufficient indications in the scheme of the Act to show that the expression shall used in sections 234A, 234B, 234C is used by the legislature deliberately, and it has not left any scope for interpreting the said expression as may. This is clear from the fact that prior to the amendment brought about by the Finance Act 1987, the legislature in the corresponding section pertaining to imposition of interest used the expression may, thereby giving a discretion to the authorities concerned to either reduce or waive the interest. The change brought about by the amending act is a clear indication of the fact that the intention of the legislature was to make the collection of statutory interest mandatory. So please honor the provisions and pay the advance tax on time at appropriate percentage. And this is what I will conclude on advance tax. And I will just carry on with the other presentations, the small presentations on just an update for you on Atmanirbhar Bharat tax reforms. 13th August it was dated. Honoring the honest was the punchline by Government of India. Now, there have been faceless assessments effective from 13th August 2020. So this is basically the circular which has been reproduced here. It's already on the faceless assessments. We are catering to those faceless assessments for our clients. And experience, if you want to hear, you need to communicate through faceless way. A proper communication gap has to be there. So what we feel till now is that the questions which are asked, or the queries which are asked through this faceless procedure, a little might sound irrelevant to the context or illogical because they are not able to interact with you. They are just seeing your financials you filed or the statement of income expenses was filed in their return, and on the basis of that, they might to ask you some questions which are very, very basic and general. So they are in faceless assessments, specifically like appeal will come later. You need to build up steps to interact with the department. Of course, as professionals, we do it, but for you people at large also, I'll give you some help so that you can carry on with your assessment procedure. So you need to first understand what they want. They can be purely technical, wherein you have to go for a professional self. They can be very basic on which you can answer them. And it doesn't end with one communication. So step one is first you address the queries. Step two, on the basis of your first iteration, they will again ask you some questions. You need to address that. So this way, the procedure begins and you have to end it. So there can be n number of multiple iterations, but please answer the requirements which are relevant. If they ask for turnover and the breakup, and if you give discount details and purchase, it will never end. And at the end of the they will make best judges assessment under section 144A. And your case of defending your assessed income, or I mean return income, will not be there. So you have to be very careful, and wherever possible, depending on your capability, on your volume of business, please consult professionals. That's the best way to begin these faceless assessments. CBDT is in the process of adopting a taxpayers charter. SFT transactions, of course, these have been expanded. Earlier, immovable property transactions above 30 lakhs were captured. Now, bank transactions which have been made through cash or bank above 10 lakhs are being captured. So these are always in the process of coming in your 26As. If you see, so they will come. The transactions, high value transactions are more than 10 lakhs, whether it is bank deposit, whether it is a banker's check purchase, whether it's a mutual fund transactions, whether immovable property transactions. Of course, it was getting highlight from the earlier days. These are all going to come, and of course, this is not the end of the story. There are other stories of SFT which are in the pipeline. If you travel in a business class, whether domestic or international, so you must be spending a lot on that, your company. So those transactions will be captured by SFT feature of their software. And the purpose is to match the assessor's capability with income. Some assessor which someone might have spent 1 lakhs or 2 lakhs on average on flight tickets from business class, and might have shown taxable income which is not taxable at all. So why this mismatch? So there will be auto-generated emails coming to the assessees. And this there is no manual intervention. Whenever this annual information return is filed by the banks or the other departments, like these days it will come to airlines also. So it will automatically capture with your income filed, and automatic system generated report will be given to you. 26 is for this link to SFT only. This will all be revamped, relaunched with new SFT transactions. So we are coming to an age where we read daily on newspapers or internet media on data analytics and artificial intelligence, how it is making a big way to our business. Of course, the tax department, our Indian tax department, both GST, CBDT, as well as the indirect tax part, they have done wonderfully well by adopting these data analytics and artificial intelligence. So please be aware, be transparent to your dealings in your business, and make sure or keep in mind that whatever transactions on data you're sharing with the third parties, definitely it is going to an database pool wherein our regulators are applying their data analytics and artificial intelligence to deal with to do their job and to conclude if any tax evasion or statutory non-compliances are there or not. So with this note, of course, there are a lot of preparedness for medium, small scale industries on the above grounds. The need to adopt all these features which is come to part of Atmanirbhar Bharat. And with all this, I will end this session with two keynotes. One is that please honor your statutory compliances as they are spelled out in the statute. If you are not able to honor, please consult professionals. They're definitely there to help you. And honor our Government of India's Atmanirbhar Bharat tax reforms. Honor their effort to make India one nation, one tax. With that, I will end this session. And of course, a lot of planning you need to do for the current year. That is the year which we are approaching post this year of pandemic. Hopefully, it will be a pandemic-free year. But with pandemic also, or without pandemic, you need to comply with certain statutory compliances. So we have from the mantra an artificial intelligence-based software which takes care of not only tax matters, of all sorts of statutory compliances. And if you like to have an idea of it, you can contact this number, of course. And about the topic per se, if you have any confusions, any further queries which cannot be explained over spontaneously, I mean, so it's a bigger query, you can write to us in the email addresses given below. So I think I can end my session. Thank you for a patient hearing. Any questions and answer?
Thank you, sir. We have one question from Mr. Karthike. He's saying that with regards to the 400 crore criteria to file, he's saying please confirm if it is financial year 19-20 to be referred or financial year 18-19 to be referred for the 400 crore criteria when we are working for advanced tax for the year 2021.
The 400 crore turnover is applicable for this year also. You can refer to that, no issue.
Okay. Okay, sir. So thank you so much. We do not have any more questions. So with this, we come to an end of
Sorry, Anvita, I would suggest you can ask if anybody would like to raise any other question. Then
Yeah.
Other than just because, you know.
Sure. So to all the attendees, if there is any more questions, please, you can definitely put it in the chat box, in the Q&A box, so that we can address it. So yeah, we have one question coming up. Mr. Chetan is asking surcharge on dividend for HNS is 15% or 37%?
So I basically I will see right now. I have to refer to the particular schedule of the income tax. So I will ask Mr. Chetan to go to that schedule. It is very clearly written what will be the percentage. So it's better to go to the schedule and check it.
Okay. So Mr. Karthike is still not clear about the turnover part.
Okay.
He's just
you can carry on with that criterion of 400 crores. It doesn't matter.
Okay. So I hope, Mr. Karthike, your question is solved, your query is solved. For more details, you can definitely contact us. So you can.
Any queries, any questions, you can contact us. We will definitely get back to you.
Sure. So I don't see any more questions coming up. Yeah. So with this, I think we come to an end of the session. Thank you so much, sir. I would thank you specially for joining us today, educating us, and our attendees. It was a pleasure, sir, to have you today with us this evening.
Thank you. My pleasure also.
I would also like to thank Dr. Renu Shom for taking time out of a busy schedule. Thank you, ma'am, for joining us. And lastly, ladies and gentlemen, thank you so much for joining us. I hope you found this session very useful and very informative, because I thoroughly enjoyed the session. It was a very enlightening one. We wish to receive your continuous support in all our activities in future as well. Thank you so much. Thanks a lot.
Thank you.
Thank you.
Thank you.